Welcome to Economics Destination. Today, we're diving deep into one of the most puzzling economic paradoxes of our time. Russia. How can a country so rich in natural resources struggle with economic stagnation, currency volatility, and international sanctions? Russia is one of the most resource-abundant nations in the world, yet its economy faces persistent instability. Why? Let's break it all down. Russia is a giant in terms of natural wealth. It spans 11 time zones, covering over 17 million square kilometers, making it the largest country in the world by land area. With this vast territory comes immense resource potential. Oil production. Russia produces over 10 million barrels of oil per day, ranking among the top 3 oil producers alongside the United States and Saudi Arabia. Natural gas dominance. Russia holds 17% of the world's proven natural gas reserves, making it the largest exporter. In 2021, Russia supplied 40% of Europe's gas needs through pipelines like Nord Stream. Minerals and metals. Russia is a top producer of nickel, palladium, platinum, uranium, and diamonds, essential for industries like electronics, energy, and jewelry. With such immense resources, you'd expect Russia to be one of the most prosperous economies in the world. However, the reality is far more complicated. There's an economic concept called the resource curse, or the paradox of plenty. It suggests that countries heavily reliant on natural resources often experience slower long-term growth, political instability, and economic volatility. Why? Because they become too dependent on commodities, failing to develop other sectors of the economy. Extreme oil dependency. In 2021, before sanctions hit, oil and gas made up 45% of Russia's total budget revenues and nearly 60% of its total exports. Vulnerability to price shocks. When oil prices collapsed from $100 per barrel in 2014 to under $50, Russia's GDP shrank by 2.3% in 2015, and the ruble lost nearly half its value against the US dollar. Manufacturing and technology weakness. Unlike Germany, China, or Japan, Russia failed to build a competitive manufacturing sector, remaining heavily dependent on raw material exports. In short, when oil prices are high, Russia enjoys economic booms, but when they fall, the entire economy suffers. And this brings us to another major factor: sanctions. Russia has faced multiple waves of economic sanctions over the past decade, primarily due to geopolitical conflicts. These sanctions have significantly impacted Russia's ability to trade, access global financial markets, and attract foreign investment. 2014 Crimea sanctions. After annexing Crimea, Russia was hit with sanctions from the US and EU, which led to a 2.5% contraction in GDP by 2015. The ruble losing 50% of its value against the dollar. A decline in foreign direct investment by over 50%. 2022 Ukraine invasion sanctions. Over 10,000 new sanctions imposed, making Russia the most sanctioned country in history. Western companies fleeing Russia. McDonald's, BP, Visa, and over 1,000 multinational firms pulled out. SWIFT ban. Russia was cut off from the global banking system, restricting international transactions. $350 billion in Russian central bank reserves frozen, limiting financial stability. Despite all these sanctions, Russia hasn't collapsed. Instead, it has found new trading partners, particularly China and India, who continue to buy Russian oil at discounted rates. But is that enough? One of the biggest consequences of Russia's economic struggles has been extreme currency volatility and inflation. 2014 to 2015 crisis. The ruble lost 50% of its value, forcing the central bank to raise interest rates to 17% to stabilize the economy. 2022 sanctions impact. The ruble initially crashed to 135 per USD, but later rebounded due to strict capital controls. Inflation soared to 14% in 2022, leading to skyrocketing food and import prices. Russia's government has taken aggressive steps to protect the ruble, but these measures often come at the cost of economic growth and financial stability. Russia has one of the highest levels of wealth inequality in the world. While a handful of oligarchs control vast fortunes, The average Russian struggles with low wages and inflation. The top 1% of Russians control over 60% of the country's wealth. Moscow is home to over 100 billionaires, ranking among the world's wealthiest cities. Meanwhile, over 20 million Russians live below the poverty line, struggling with rising living costs. This extreme inequality fuels corruption, stifles innovation, and limits economic growth opportunities for ordinary Russians. Russia's economic future is uncertain. While it has survived multiple crises, it faces major long-term challenges. Can it reduce energy dependence and diversify its economy? Will sanctions and global isolation weaken Russia's influence over time? How will it handle demographic decline and brain drain as thousands of young professionals leave the country? Russia's paradox is that despite its vast wealth, it remains vulnerable to economic shocks and geopolitical risks. Will it break free from the resource curse, or will history keep repeating itself? Let me know your thoughts in the comments. If you found this video insightful, don't forget to like, subscribe, and hit that notification bell. See you in the next episode of Economics Destination.